Well, the markets, we keep being told, doom and gloom, doom and gloom. The oil prices are going to go up. Well, oil prices did go up. Oil prices went up about, $8 to $10 a barrel, right? 72. West Texas Intermediate, 72.92. Brent crude, 74.52. That's it had been running between $60 and $65 a barrel. Now it's $72 a barrel, $74 a barrel. So it's up $8 or $10. What does it mean? Well, let's bring in Nick Hopwood, certified financial planner, founder of Peak Wealth Management, where they manage $400 million for high net worth individuals and small business owners. Nick is known as Mr. Roth because that's sometimes all he wants to talk about. Nick, welcome back to the program.
Thank you, Steve.
Good to have you here. All right, let's talk about these oil prices and the uncertainty. The markets didn't seem to mind yesterday. NASDAQ up 1.5%. Pretty good day on the markets, wasn't it?
It was, and we did see that oil spike, but and stocks dropped for basically just a few minutes, and within a day they were recovered. So this news in the Middle East has not done much for the stock market. Yeah,
nothing negative anyway. In fact, it looks like a pretty good day. Yes, gold prices remain strong, $3,300, $3,400 an ounce. Look, I know this whole thing with BRICS nations is coming up in July. Anything to concern myself with there?
Yeah, I'm not concerned about it, but you mentioned the price of gold, right? If I owned a lot of gold at this point, I would be thinking about what's my next plan? What's my next move? Because it has had basically a parabolic move, which we know cannot be sustained. So if you have big gains in gold, maybe it's time to trim some profits. If you're thinking about purchasing, maybe wait for a pullback.
All right, so there's that. All right, so here's something else, and this is one of the main things you want to talk about today. Empower is one of the largest 401k providers in America. They're going to start allowing private equity, private credit, private real estate investments inside 401k plans. These sorts of things have never been allowed previously. I know because I've gone to my 401k providers in the past and, hey, can I buy this piece of real estate with my 401k? Oh, that's not allowed. Actually, it is. It's just a difficult route to get to. I learned that later. I was told it wasn't really legal or possible. It is. It just takes a lot of work that people on your side of the ledger aren't always interested in doing. Tell me about what's going on here.
So, Steve, you can purchase, private equity, private credit, private real estate in your IRA, as you mentioned right now. But inside of 401, it's never been allowed. But it is now being offered by Empower starting later this year. And so one of the considerations is that you have to sign up for one of the Empower managed programs. So you're going to have an extra fee. These programs come with higher fees to begin with and less liquidity, but they are great diversifiers. Because if you look at just stocks and bonds, bonds are a great diversifier for stocks, but bonds don't necessarily have the great reward potential that you might be hoping for. But some of these other assets do. They offer higher potential returns and very nice diversification. What I worry about are people, going rogue and trying to go 100% into certain asset classes, which maybe are not suitable. But I think Empower is going to have some guardrails in place to make sure that doesn't happen. So I think it'll be interesting to watch.
Yeah, here's what I wonder. If I find a piece of real estate that I like, here's a chunk of ground that's for sale I drive by every day. Can I put that into a 401k? That's my question. Can I take my 401k and buy that property? And if not, why not? Why should I not be able to invest my retirement money the way I see fit?
So there's a distinction between a 401 and an IRA. Yes, you can put, the dirt that you're speaking of that you want to buy in your IRA, but you have to have a special custodian to do that. You can't just do it in your Schwab account and place a trade like you would for another real estate stock.
Right, so but I can take care of the stock market.
There has to be a special qualified custodian to hold that property. Mm-hmm. Then we talk about a 401, which is a employer-sponsored plan. And so the employer-sponsored plans, they're just not going to get involved in purchasing, off-market property like that. So I don't think that's going to happen.
No. Too much government regulation. That's just my opinion, Nick. But hey, I just work here. Retirees often think that moving to Florida, Texas is going to save them a pile of money. Tennessee is also on that list. But a Wall Street Journal chart shows that's not always the case. Put it up there for the folks to see and let Nick explain. Go ahead, Nick.
Yeah, I found this very interesting because we often have people talking about moving from higher tax states into lower tax states for retirement. And so the Wall Street Journal does an analysis here with California and Florida. And naturally, we think of California as the high tax state and Florida as the low tax state. But even with all the stuff that's going on in California with the homeowners insurance, Florida has got it much worse when it comes to car and homeowners insurance. So you can see on the chart, it's actually more expensive to live in Florida than California. This really blew my mind.
Wow, then that's why I'm going to stay right where I am in Michigan. Where's Michigan on this chart? I don't see.
I don't think a lot of people have Michigan as their retiree destination, so they didn't put it in the analysis.
I love Four Seasons. What's wrong with you people? Anyhow, how about a new 529 rule? It means that you could be saving money for education. It doesn't have to be a degree program. That's new. Tell us about that.
Well, it's not official yet, but it's part of the big, beautiful bill. The Trump administration is trying to promote advanced education, but not the traditional college route. So in this case, it would include programs like the EMT or HVAC. And so I think that's interesting. It's a good way to promote. And here we have the chart with the retiree spending, Steve. So if you look at, many people have heard of the go-go years and the slow-go years and the no-go years. We spend less as we age. JP Morgan has this data because JP owns Chase. All the bank data, all the credit card data, they have all the analytics. And what they're showing is that after the first 10 years of retirement, our spending typically decreases 13%, and then another 13% in the second decade. And then it levels off. So basically, we have our fixed costs, and those stay the same, but our discretionary costs continue to go down because of that.
But always, it doesn't say it on the chart, but I'll say it. Always get a second opinion. PeakWM.com. PeakWM.com. You can talk to that guy right there. You can talk to Nick. We got that QR code for the world? I don't see it. We're going to have to get it next time, Nick. I'm going to reprimand these people.